If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you.
How's it going, man?
It's good. I'm doing well. Things are good here in Nashville.
Good. Same here. Things are good in Mexico City this week. I am still working out the recording setup. So, like, if you're watching this, I've got some shine on the forehead. Just these lights in this room. I don't quite have that all figured out, but I think generally speaking, we've got the audio situation pretty good. This week, Vic, for me, I've been just trying to, detach from the intensity of all the political stuff and, spend a little bit of time focused on what's happening in the technology space. And not like AI, because everyone's always sort of talking about AI, but more like, what's happening around, apps and what's happening around crypto build out. And the thing that I have found is that there's not much happening.
AI has taken all the energy.
AI has taken all the energy, and I think everybody is so focused on trying to figure out how to cross this chasm of the way we use computers today, right? I mean, down to not so much the hardware, but really the interfaces. I think we're probably 2 steps away from the phone not being the real device. I think Zuckerberg is still too early on that stuff. Yeah. But the interface, right? This push to get the interface beyond buttons and swipes, right, into ambient talking, AirPods, just agents, things being agentic. It really feels like that is where all of the human intelligence is focused right now. Like we're kind of at a standstill on the kind of innovation and development we've been accustomed to over the last 20 years. Yeah,
that's right. The LLM pure technology is plenty good enough. It'll get better, but it's plenty good enough now. It is the interface, and the vibe coding does not yet work. I got excited about this thing, Lindy, and then I canceled it yesterday because it just doesn't really work to put into production. It
could work for a 16-year-old who could spend all day on it. Right.
Yeah, well, if you can build your own app and push it into Google Cloud, then you can work with a vibe coding and do that faster. But these people that are saying English is the new coding language is not yet true.
No, it's not yet true.
Far away, but it's not true.
No, it's not yet true. There is a podcast, Dan Schipper from Every has a podcast called AI and I. Yeah. And he interviewed Aaron Levy, the CEO of Box, who just a quick side note. I mean, when I see him, I always think of him as like a kid CEO. He's been CEO of that company for almost 20 years.
Yeah, right. He's not a kid.
He's not a kid anymore. Yeah. But anyway, I find him to always be sort of grounding. I think about him as like an even more like a less sensational Benioff. Just like kind of someone who really understands the practical reality of enterprise software and what the innovation cycles actually look like. And I think he kind of captured it, man, which is to say we are eventually going to lose many, many, many jobs to AI. I don't think there's a question about that. But we're actually quite a ways away from that today. Right now, that doesn't mean that large corporations won't jump the gun and just like start, throwing all their resources at AI and just deciding they're going to fire people because they want the stock price, the appreciation that comes with that. But what he said was that for the most part, what AI is going to enable is a higher level of productivity for every person who decides to invest the time into learning it. And those people will outcompete those who don't do it. And I think at least for some period of time, that's the reality we're in today, right? October 2025, where we find ourselves today is we're going to talk a lot about job losses in AI, but what's actually happening on the ground is the people who are spending the time obsessing about how to do their existing workflows with AI are going to beat the people who aren't.
Yeah, I think that's right. I mean, the thing I'm starting to believe is that we're not going to get, it's going to be a lot of years before we get to where generative AI, I'm going to call it non-deterministic AI, where it's a probability function. So every time it runs, like rolling dice, you can predict, you can say most likely what will come out, but it's not deterministic. It's not that that is not going to be sufficient as a standalone. Like the only project that I've successfully been using now mixes, some actual old-fashioned Python code that is deterministic. It's going to do the same thing every time.
Right.
And then it combines that with like modules, like sandbox controlled places where the tool is generative, not deterministic.
Right.
And that has been successful. Doing it all in a vibe coding thing where it's all generative, at least for me, has not worked at a level of quality that I could show anyone, that I could use.
No. Now, having said everything I just said, they are tuning LLMs to really have a broader capability when it comes to tasks, especially tasks that people who used software previously did. And I do think that there are specific industries where there will be accelerated job loss. One of those being the motion picture industry. I do firmly believe that what Sora, we were already kind of like wow with VO, from Google, but I think Sora 2 has pretty squarely presented a case that we're not gonna need the super expensive visual effects studios that we've had in the past. We may not even need the robust game studios that we've had in the past, right? And so many of the digital creative professions, those to me do seem like they are today endangered.
Yeah, I think that's right. It's going to be this slow rolling process with things like that, where you could take pieces that go into a game that a developer would spend a lot of time building a house, and they make that house look realistic, and then it fits into the world of the game. That I think can be done much more quickly and more inexpensively, and the quality is very good. I think Google is dropping their VO next version tomorrow. It's a rumor. We haven't seen it yet, but they're just going to keep getting better and better. And then I think places like call centers and credit card companies, financial services, accounting, I think, where there's like a lot of data that you have for decades of data that you can feed into the models will be better than somewhere that doesn't have a lot of recorded data. But it's going to be kind of messy and uneven.
Yeah, and a lot of these jobs, it's interesting, right? Like a lot of these jobs are, I don't know, maybe this is not true about the call center. I'm pretty squarely fixated on the digital creative jobs. Those jobs to me feel new, right? I mean, and also those jobs feel like they in fact disrupted analog jobs. That where people, if you didn't transition your analog design or photography skills into the digital realm, you probably got replaced by someone who performed that skill, right? And so there seems to be sort of a predictable path there, whereas when we're talking about taking over something that a human has always done and it's never been done by software, right? Like those things, that's where I think we're a pretty good step away from those jobs being entirely disrupted.
Yeah, and there's going to be some job creation as well, where there will be more there'll be more games with fewer users, more movies with fewer users, because the cost to develop them is going to come down. And I don't know how that will flesh out, but there'll be more and more people that are able to produce marketable digital creative content.
Mm-hmm.
That, probably is, there's pros and cons. I don't know if it's a net positive or net negative, but there's people that win and people that lose in that process. And I think the takeaway, because I talk to people all the time that, they are not as focused on this as I am, because I'm a maniac about it. And they say, well, what should I do to protect my job? I think the key is just start playing with it today. Start using it, because the people that get replaced are going to first be the Luddites that don't at all want to use. They're trying to avoid the tool. So we're VCs. I think VCs that can use AI will be protected for longer than VCs that put their head in the sand and are not able to use AI at all.
Well, yeah, and at the same time, like there are so many. I think one of the core points you're making is that when it comes to actually bringing something to life in the human world, there's a level of orchestration and even commercialization that these non-deterministic LLMs there's no proof they can do that today, right? There's no proof they can do that. They're prediction engines. They can't. And this is another thing Aaron was bringing up. It's like there's so many unmeasured human-to-human touch points in the economy that are critical for the actual delivery of value, right? That don't fit on a spreadsheet nicely anywhere. They don't fit on a 6-page Amazon brief, but they're fundamental to it, right? And that's where LLMs have no ability today, right? Anything that depends on constantly emerging reality, the LLMs, by the nature of what they are, cannot do anything with, because they're predictive token engines. Right. Yeah. Or predictive probability token engines. So that they need the data in order to make the next correct prediction, Yeah. And so that's the thing. It's like as human culture continues to emerge, that's just sort of the nature of life. That's where we are at the moment. Indispensable. That's where for the time being we're indispensable. But these things that are kind of the creating components that need to be orchestrated by humans for commercialization, that whole layer of things is that's where it gets kind of scary from a job perspective.
That's right. So you need to keep learning what you can do differently, better, faster, more effectively. There's a lot of things that humans aren't good at that deterministic software and non-deterministic software is good at. And incorporating that into your job or your life, I think is like I don't like to drive, and I would looking forward to the day where I can just get in a Waymo or a Tesla or whatever the brand is and ride around, go home. I think humans are pretty bad at driving in general. We have a lot of deaths.
Agree. Completely agree. All right. Thanks for engaging with me in that exercise. I mean, I feel like there's been so much noise, and we're even going to end the show today talking a little bit about that, but there's been so much noise about AI taking away jobs. And you and I have been part of proliferating that noise. But I do think it's an important time to sort of just step back for a second and say, okay, but that's not where we are today.
Right.
Across the board. It is true in pockets, and what are the properties of those pockets so that we can be more precise in who we're worried about, right? As opposed to just like a broad panic.
Yeah, and I think we got a lot of feedback last week from our sort of off-script discussion, just kind of riffing on things. I think the audience likes sort of pockets like this where we're talking about something that is involved in the news, but maybe not tied directly to a story.
Yeah. So with that, let's get to our first story and let's dig in. Starting with gold prices topping 4,000 for the first time. As we were prepping for the show, you and I were we were batting back and forth. What does this actually mean? I think that the easy default answer is it means people are worried and they're sort of flying back to the old trustworthy store of value. Yes, okay. But at the same time, we have to look at the U.S. stock market and say, is the U.S. stock market crashing? And the answer is It's taken a dip, but by no means is it crashing.
Yes,
Sort
it's
of
all-time high
in line
yesterday.
with
So
the.
today was down, but it's
That's
down
right.
from the
That's right.
all-time
So
high by like 0.5%. Yeah.
that's right. So I turned the mic over to you, Vic. Like, what do you read into gold hitting an all-time high of $4,000 while the stock market itself is also continuing to gain?
I mean, I think we've been talking about it in different segments over the past 6 months. There's going to be, I think, a bunch of inflation, a bunch of government spending that happens over the next couple of years. Our debt situation, when the government is shut down right now, fighting over the debt
Sure.
levels, our debt is continuing to spiral up. And so, to me, this is a signal of various traders losing confidence in the U.S. government, from it is the most stable government in the world, always going to be there, to now more uncertainty. Not that there's any imminent thing, but it's not as strong as it once was. And there's going to be a ton of inflation. Yet the stock market, it's sort of that K-shaped economy. If you have financial assets, the U.S. government and others are going to prop up those financial assets with cheaper interest rates or bailouts or whatever.
Sure.
Which will be okay for solving the immediate crisis, whatever that crisis is, but it's going to drive inflation. And so people are going to gold to try to hedge against that. Or if they're younger, I mean, I'm not that young, but I buy Bitcoin as opposed to gold. But Bitcoin also it came down today, but this week it hit an all-time high, I think.
Yes. Okay. So I agree with everything that you said. I want to add something to it that has just sort of hit me in the last couple of weeks. I think some of it has to do with spending more time in different countries, right? It's thinking of the US dollar as the fundamental denominator for all other assets in the world, right? So I think when we look at gold topping 4,000, it assumes that the dollar is like this stable thing and gold is like gaining against this, stable element on the periodic table, right? And the truth is it's not, right? It's revocable, it's fungible, and it's only a denominator insofar as the dollar has dominance, right? And I think that the reason why equities are continuing to grow at the same time gold and Bitcoin are continuing to grow at the same time other nation state currencies are growing against the US dollar is because the US dollar as the dominant reserve nation state currency is the thing being questioned right now globally and for good reason, right? I mean, there's a lot of other stuff happening around the world. There's the union of the BRICS. There's what's happening in Japan right now. There's, it's a very dynamic world. Obviously, there's all the different trade and tariff activities that President Trump has put into effect all year. There's looming, there's wars. There's potential ending to wars. There's potential new wars that are flaring up. So with all of that uncertainty, and the U.S. sort of, weirdly at the center of much of it, right? Because President Trump is he likes to be very involved with many things, right?
Yeah, he's at the center of everything.
Yeah, he likes to be involved in many things. What I read into it is, at a minimum, people are saying it seems like the U.S. dollar might be overextended, and maybe it's time to it's not the end. I feel like so often when we have these conversations about the US dollar, people can only think about it in binary terms, like a switch flips, and it's just like either it is the reserve currency or it's not the reserve currency. And as long as it's the reserve currency, it's 100% the reserve currency. And I think no, it's a shifting that's happening, And so anyway, that's my
So I mean, I guess I agree. Where I thought you were going to go, you didn't quite go. So I'll say what I was thinking, which is the price of, maybe it's 1 ounce of gold, or this is priced like 1 ounce of gold is worth $4,000. that can increase if the value of gold increases, or if the purchasing power of dollars decreases,
That's
because you
right.
need more
That's right.
dollars to buy the same thing. And so
That's right.
one way to think about inflation is it's sort of the debasement, or I don't like that word because people don't understand it. It's the deduction or the reduction of how much $1 can buy. So if it's 4% inflation, next year you can buy 4% less stuff. Is what inflation means. And so if we have a lot of inflation, it means dollars are going to be less valuable, and things like gold that are priced in dollars, or Bitcoin, or a piece of real estate, even if they don't change, their pricing might change because the value of each dollar has gone down. Does that make sense? I'm not sure I'm explaining that well, but
yes.
Yeah.
Yes.
So I think it's probably both. Like people value gold more in scary, uncertain times. We have, and also the value of each of those $4,000 is getting less valuable.
I built on what you said, and then you built on what I said. And I think if we had a Bloomberg terminal, we probably could ask its AI and probably get something that tells us that we're pretty much right. We're pretty much right. That ultimately these are all signs of the global markets asking questions about the U.S. dollar, right? As its purchasing power is not as stable as it has been in the past.
Yeah,
right?
And I was trying to explain the K-shaped economy to my son a couple of days ago, and it's hard to explain. Like, why is the lower part of the K doing poorly? And I think it's because all of their net worth is in dollars in a checking account, or they don't have financial assets that are priced like gold. They're priced in dollars that appreciate as inflation happens, and so they just get the loss of purchasing power, which you and I get, everyone gets. But if you have financial assets, then you also get the benefit of kind of the inverse of that purchasing power.
Yep. Okay, next story. Also Wall Street Journal. Soybean farmers are panicking over the loss of Chinese buyers. I should say American soybean farmers are panicking over the loss of Chinese buyers. So what's the backstory here, Vic?
So China is by far the largest purchaser of our soybeans every year. For 30 years, they've been the largest buyer. And because of the tariff and trade fights, they decided, and I think that one of the benefits of China is that from the government, like on high, they just came down and said, we're not buying U.S. soybeans any longer. They haven't bought any soybeans this year at all. And that leaves, of course, a very large gap in the market that are making the farmers very nervous. Trump has already been talking about doing subsidies to farmers to help, offset trade and tariff problems. I just was not paying attention. I thought it was just sort of platitudes to keep a big base happy. But we're going to have to come in and buy soybeans because a lot of farmers are not going to survive with this.
Yes. In addition to everything you just said, in this story, they talk about other countries that are soybean producers, Brazil and Argentina, and the fact that in addition to China shutting off the general purchase of soybeans, they also have been shifting away from the U.S. and buying soybeans from Brazil and Argentina. Brazil and China are both founding members of BRICS, which is a financial alignment of countries that essentially stand counter to, I think the G7 is probably the best way to position it, where the U.S. is sort of in the center with the U.S. dollar. And so they don't have a universal currency. They each have their own currency, but they are forming very, very strong economic ties. And I think while that's probably secondary to the sort of furlough of purchasing that China is doing in soybeans, period, it's an important secondary story to tell here, right?
Yeah, no question. All these stories are interrelated, right? But I think, yes, the other countries are going to move away from America and using dollars. And then it's very likely, the article says that the Trump administration is considering $10 billion to $14 billion subsidies to farmers. that's one example of many where the government's going to print more dollars and give it to some people, in this case, farmers, which maybe it needs to do. I think it probably does need to do, but that's going to drive inflation.
Yeah.
So we just go around the merry-go-round again.
Agree. Okay, and then we were talking about during the gold segment that the stock market did hit an all-time high. The 33rd time in 2025, the S&P index closes for a record high. I mean, and again, there's only one story to this S&P index hitting these all-time highs over and over again. It's tech, more precisely, it's Mag 7, more precisely, it's AI, right? And so I think this really continues to punctuate how tip of the spear AI is to this economy. And even though it's not having a practical impact in terms of, like, if you were to look at American GDP and you were to say how much of it is fueled by actual AI, I don't mean speculative AI, I don't mean applying future, value to today's revenue. I mean, it's very little. It's very little of the American GDP is actually driven by artificial intelligence. But man, are we betting the whole house on it, right? I mean, it is the bet of our lifetimes, it feels like.
Yeah, I mean, I didn't put the story in, but there was a research paper that came out, I think yesterday, that the data center build out, so the AI data center capital investment, accounted for, I think, 95% of GDP in the last 9 months. Like, it's basically all of GDP is accounted for in investing in, big buildings where no one works with a bunch of technology. And maybe that will pay off. It also might be a bunch of stranded assets, some combination probably. But yes, we're living on this like CapEx fueled, maybe hope that AI comes around.
Yeah, it's remarkable how focused that is. Okay, moving into the VC rundown. Duos, spelled DUOS, snags $130 million in equity investment to scale AI benefits platform for seniors. This is Fierce Healthcare.
Yeah, so this is AI targeted directly at seniors in Medicare Advantage plans. Huge round, but it's a big market. There's a lot of opportunity there.
Yeah, the investors around the table, FTV, with participation from Forerunner. I just want to make a note. Forerunner is doing more and more in healthcare. So that's just something as a footnote. You and I should offline take a look at that. But I'm glad we do the VC rundown because it shows me which funds are that are not 100% healthcare are showing up more and more in healthcare, and Forerunner Ventures is showing up more and more, and in pretty sizable rounds. So that's worth tracking. Truepill, co-founder's latest startup, Foundation Health, begs $20 million to bring AI to pharmacy operations. Pharmacy operations is definitely a space I've seen a whole lot, and I think I've always just been concerned. I mean, actually, I don't even think we have the story in here, but Rite Aid finally called it quits, right? I mean, they finally have shut down all their stores.
Last 80 stores. Yeah.
Yeah, and we know that independent pharmacies also are just so embattled, right?
Yeah, I mean the transfer pricing of the PBMs who own a lot of the big platform chain pharmacies has really cut a lot of the profit margins out. It's very difficult to run a pharmacy, and there's not enough workers. So it's great to see technology being brought to bear. Vanderbilt invested along with Defined Ventures in this deal, so it's good to see Vandy getting involved. I think it's going to be good.
Yeah, but isn't that interesting that a health system invested in this, right? So it's like the pharmacy. When you say pharmacy operations, I mean, I think people might traditionally think, okay, like dedicated pharmacists, but I think it's going to be more embedded pharmacies inside of health systems and big providers where this might be helpful.
Yeah, I think it's both end. I mean, Intermountain and Vanderbilt both invested. They both are concerned about their internal inpatient pharmacies. But I think there's a lot of concern with making sure you can get medications dispensed once the patient leaves. When they get discharged, there are places in this country where there's just pharmacy deserts. Now, we talk about food deserts. Now there's pharmacy deserts where you should drive a long way to get your drugs. And that drives compliance down, obviously.
Yeah, for sure. So look, we'll see. I personally have avoided pharmacy deals, but again, if Vanderbilt's in, then they at least have a strong anchor client there. Oath Surgical raises $24 million to advance outpatient surgical care network. You pointed out this was sort of the first time, at least in a while, that you've seen a VC deal in outpatient surgery.
Yeah, that's right. It's coming out of San Francisco and Oregon, so not what I'm used to seeing, like out of the Nashville crowd. Outpatient surgery is really benefiting from the, site of care neutrality payment reform, but it's also hard to operate at scale, and so I'm hopeful. We'll see.
Yeah, people around the table here, FPV Ventures again. So this is the second deal they led in this week's rundown. So that's something to note. And then supported by McKesson Ventures, Black Opal Ventures, and Rogue VC. So all notable names there on the cap table there. Attuned Intelligence emerges from stealth with $13 million to automate hospital call centers with supervised AI.
Yeah, so this is good to see more competition in this space. It's pretty crowded already, but they're sort of having supervised AI, a lot more attention to quality and human in the loop, which I think at the hospital call centers is really important.
Okay. And Heidi Health raises $65 million to expand global reach of its AI medical scribe platform. So I think the important thing here is global reach, because we're talking about an Australia-based company. So you and I are constantly talking about how this space is very, very, crowded, and we would never want to invest in the space. But we're talking about the U.S. when we say that, right? And so Heidi Health is based in Australia, and there are many, many other markets around the world where scribe technology is absolutely going to be used. And it looks like this is, maybe the equivalent of an A-Bridge or something like that, coming out of the Australian continent.
Yeah, that's right. They have a presence here, but I think I haven't seen them a lot. I think it's fairly limited. But the expansion money is really designed, they say in the article, for Ireland, France, Spain, South Africa, Hong Kong, Germany.
Right.
So it definitely is that like next tier where they need technology, but maybe they don't have as many. A-Bridge is probably not there right now.
Yep. Agreed. Okay. This story we grabbed from the Newswire because you originally saw it on Axios, but we just don't have access to like the Super Pro edition. But Remedy Robotics, they had around, I think it was 35 million, you said?
Yeah, that's right. 35 million. I think Axios had the exclusive for that.
Okay.
I love Axios, but I couldn't find a way to show it to people.
Yep.
And so this is a robotics device company for, I need to say it right. It's endovascular surgery. So this is going through your artery into the heart and removing either a stroke or a clot. And it saves lives, but you need a lot of physician skill to be able to do it. And there just aren't enough cath labs with enough doctors to treat all the patients with heart disease. So it'd be great to get this out. Many more docs will be able to use it. It fits right into the cath lab kind of setup. So pretty exciting. I don't know. I haven't seen the results, but exciting to see it come out.
Yep. Rock Health came out with their Q3 market overview. They always do a great job of covering the digital health and healthcare investment markets. And so, I think a lot of capital raised this year, relative to last year, $3.5 billion raised across 107 deals, bringing the total year to date to $9.9 billion across 351 deals. So that seems like relatively healthy activity. But I think the big thing you noticed in here was that it's getting hard to track the benchmarks because now, I guess, startups and maybe even the investors who are writing the term sheets are ditching the traditional labels, seed, pre-seed, Series A, Series B, Series C. if we don't have those markers, it's very tough to sort of organize how capital is flowing across different maturity levels in the venture markets. But we also know, like, the last 3-4 years have been highly disruptive to that structure of named rounds. I would say just even seed to Series A, for those who are not in our business, we talk about when a company moves from one stage to the next stage, we call that a graduation. You graduate from being a seed stage company to a Series A company. And the graduation rates, just like they would be in a university or high school, the graduation rates have been declining rapidly year over year. But a lot of these companies still need money. And so, they're staying at seed or they're staying at Series A longer. And we've been, what we have been seeing is seed A, seed B, seed 1, seed 2, seed extension, right. Series A1, Series A2, right? Like kind of these the sequels of a round in the same stage, right? Because the companies can't quite graduate. And it seems like everyone's maybe decided they're getting tired of that and they're just not going to label the rounds anymore, which is actually pretty problematic for our ability to measure the space, right?
Yeah, that's right. And I think I don't see it going back. I mean, I think each company and each board of directors, if they're looking at, gosh, it's a hard market to raise money, why don't we put together a seed extension or a seed 3 or whatever, seed 2,
right?
Or an A- or whatever. You just sort of like make up different names because you don't want to be compared to, what 4 years ago was what was needed to be an A company. But you're right, that makes it very difficult to track anything because there's just no labels that mean anything.
Yeah. So, I mean, I don't know. We every quarter, and we're at the end of the third quarter, and so obviously, the reports are going to start coming out. Rock Health, they typically come pretty early, but Carta and PitchBook, they'll start coming with their reports, and we really count on that to be able to communicate to portfolio founders of like, hey, this is the reality of the market today. This is what it's looking like for graduation rates. This is what it's looking like for you to get to that next round, and we also use it to communicate with our LPs. Right. And to kind of say, hey, markets are looking good or markets are not looking so good. And not having those markers anymore. I mean, I don't know, Vic, I just feel like we're getting this deterioration of data we can trust. Like, it started with BLS, and now we're here in the venture world. Like, we're losing the underpinnings of the data we use to try to forecast the future. And we're not the Fed. So, I mean, I'm sure the Fed has a much harder job than we do. But I don't know. I just feel like the quality of the data is eroding.
Yeah, that's right. I think we're going to need to start tracking our own data in terms of revenue or employees or customer count or something that is we can be confident every company will have, so we can, even just report to our investors or report to each other or
absolutely.
We need benchmarks. Yeah.
Absolutely. Yeah. We're losing our benchmarks. That's right. Okay. And then one more story that we weren't quite sure where it fits, but I liked Vic's idea to stick it here in the VC rundown. But it's actually a very, very large acquisition. Qualtrics is buying Press Ganey Forsta for $6.75 billion to expand their reach in healthcare. So I think most people know Qualtrics is like the big survey company, kind of the enterprise survey company. And Press Ganey Forsta has been a big sort of growing acquisition machine in the healthcare space, specifically around HEDIS and consumerism and marketing and patient engagement and sort of all those types of things. And now it's becoming like one massive, massive company. And so a couple of things on this. One, this kind of consolidation is interesting. My view is when I think about Qualtrics as a former technologist, I don't view them as an incredibly innovative company. Meaning I don't see Qualtrics rolling out the freshest, flashiest, coolest technology. And Press Ganey, I have always thought about them as a big acquirer. right? Someone who like they're great at go to market, they've got great customer relationships, and they bring new capabilities to those customers through acquisition. And so, one is this an even bigger balance sheet to buy more companies to deploy out into the market. That's one question. But then the second question is there a concentration risk here? Are we approaching a monopoly just in terms of the scale of this company serving health systems when it comes to patient engagement, consumerism, marketing, et cetera?
Yeah, I think that's right. It's I don't know. I have hope that, Press Ganey has always, in my mind, been really good at distribution, and they bought products, and then they were very strong at sort of taking that product that maybe one of our companies had sort of gotten some distribution but limited, and then they push it to everyone. That's sort of their game. Qualtrics / Press Ganey Forsta could be great at. They could do that same thing even better. That's the positive side. The negative side is they might be so big that they don't want to do any acquisition under 500 million, which would be really negative for the startup market.
Right. Yeah. So it's just an interesting thing. Like competition, I think, breeds more acquisition, right? Because you're looking for new competencies, and I think what they're saying here is that Qualtrics didn't have a great foothold in healthcare, and so this is getting them a bigger foothold. But the thing I'm sort of watching out for is and there are other big brands in the space. Truepill is sort of another very, very big company that is a regular acquirer. Yeah. So there's still other exactly. There's still other folks in the space, but this is now a very big company, right? This is now a very big company. Yeah. And so just something to watch from the dynamics of, does this accelerate M&A for this sector, or does it sort of decrease it?
Right.
All right. Now we're moving into policy. So Trump wants to overhaul drug sales, and a company that is tied to his son stands to benefit. I don't think this is surprising to anyone. The Trump family is they're enterprising. They're all doing deals all the time, and I don't think they make any apologies about lining up policies with their commercial efforts, and which comes first is kind of a chicken and the egg story. But Vic, just a little bit more detail on this one, and in this case, we're talking about Donald Trump Jr.
Yeah, that's right. So it's like everything, the Trump family has decided that if they do things in a very transparent, open manner, then they can sort of do, I think, whatever they want. It started with the Trump coin, on Inauguration Day.
That's right.
Which was a very clear way to monetize the position that Donald Trump was getting inaugurated into. I don't think that's controversial. Even strong Republicans would say that. And so it's just a different way to handle potential conflicts that I've never seen before at this scale. And I think we need to start getting used to the fact that this is the way that government is now working in the U.S. But yes, BlinkRx is the company name. Donald Jr. joined the board and invested in it, I think, this summer. The policy with the various drug manufacturers using online prescription companies like BlinkRx is not set yet. It's going to be set in the next month or two. We're starting to get, concepts put out. And so Wall Street Journal is pointing this out. I think it's just part of how things happen now.
Yeah. Last week we were reporting on Trump RX, right? This is right. To me, it's like this is going to happen, right?
This is the new way that business regulation and conflicts of interest is handled. The Trump administration is not shying away from disclosing things, which is, I think, positive compared to not disclosing things. But they kind of feel like once we put it out there, you can do whatever you want. And I don't think we're going to put the genie back in the bottle. It's just
No. no, we're not going to put the genie back in the bottle. That's exactly right. On the other side of the coin, Governor Newsom in California has signed a bill to curb private equity's role in healthcare. You tried to explain this to me before we hit record, and I couldn't quite understand the details of this new bill. So let's try one more time in real time while we're recording. What specifically does this do to limit private equity's role?
I mean, the interpretation is going to be interesting to watch, I think, but this bill, which is now signed into law, prohibits private equity firms or hedge funds from interfering in healthcare decisions, including those related to billing and coding.
Okay.
How that is interpreted, is unclear, but it could be interpreted, broadly to be all of the practice of medicine in coding, pre-auth, like how are things coded? Maybe it is on a very narrow basis. I think it's going to be a challenge for private equity.
Could it somehow have could it somehow have a like an impact on the state's ability to force, let's say, a private equity owned hospital to continue to operate even when they're losing money?
The guy's name is Calberton, I guess. He's a congressman. His quote is, "There's driving private equity investments in healthcare, and this bill demands that modern enforcement tools are not used to restrict investment, but they make sure that they don't hurt patient outcomes or drive up the cost of care."
Okay.
And so, I mean, everyone wants there to be lower cost of care and better outcomes. I think all the private equity investors want that. But
Sure.
how that gets implemented is kind of in the eye of the beholder. Like you're saying, that if maybe you shut down a service line at a hospital because it is not enough demand. If there is one patient that would like to use that service line, that is hurting their outcome. And so it's a challenge to navigate in that sort of opaqueness.
Yeah.
There's another bill that is not signed yet, but passed, and so it's not clear if Newsom will sign it or not. And that empowers the state to review the investments that private equity companies have made and then do fines and other things. That hasn't been signed yet, so it's not clear if that will be signed or not.
Okay. We'll just have to track that and see what the actual impact of that bill is. Dr. Oz was with the Aspen Institute, and he spoke about the shutdown, Medicaid cuts, Medicare Advantage audits, and more. I have to say, I'm an Aspen Institute fellow, and I was actually a little surprised to see Dr. Oz there, but I think maybe it's simply because, like, I would sort of think of the Aspen Institute as maybe one of those think tanks that the Trump administration did not see as, like, I don't know, aligned or just like a place that they would be seen platforming their views. But I was happy to see it. It just was, I'll just admit honestly, it was a surprise to see it. And it sounds like basically he is reiterating the points that the Republican Party were making during the One Big Beautiful Bill march to approval, which is that the cuts to Medicaid are not actually cuts to the poor, but about fraud, waste, and abuse, and we need to reopen the government. Is that basically what happened here?
Yeah, he said a bunch of talking points that we have already heard that are Republican talking points. But then he did say that he would like to see this guy, Dan Brillman, named as Medicaid director.
Okay.
So that, to me, that was new. So he has now talked about who he wants to be. Supposedly he's in the interviewing and sort of approval process I didn't know this person before, 2 days ago. He doesn't have experience in government. He's a businessman, and I'm sure he would be good. But that was new. So like that name now is out there in charge of Medicaid, or not yet, but would be in charge of Medicaid. So we need to learn more about him, assuming he gets appointed.
Yep. Okay. Okay, moving into payers, UnitedHealthcare and Johns Hopkins continue their battle, and we're not into the drama of these debates, but I think what is interesting about this one in particular is the nature of the debate, right? Which is that Johns Hopkins wants more say over which employers can be within their network. Is that the fundamental disagreement here?
Well, as characterized by UnitedHealthcare, Johns Hopkins has stated it is about rates, but UnitedHealthcare is claiming that the sticking point is not rates, but it is that Johns Hopkins will not accept their sort of different, the different networks that they have, where that you can get in network A, B, C, D, and they sign up employers, and employers typically choose a network and sometimes they move around network because the pricing can be different, and different networks have different capabilities.
Mm-hmm.
Johns Hopkins wants to be able to themselves selectively exclude employers that they don't align with. I'm not clear what align with means from a health system with an employer, but that's what United is claiming is the sticking point. So what the quote is, a provider that selectively and unilaterally turns away patients regardless of medical need or coverage disrupts equitable access to care. And that sounds right, but I'm sure there's another side to this story.
Yeah. I mean, obviously there's two sides, but I wonder, it's not lost on me that Johns Hopkins is a university based health system. They were, probably, one of the first big name universities to be, diminished in terms of their funding for NIH based research. And so, there's so many things that could be underneath this. And I guess what I just wonder is whether or not this is systemic. Like, is this isolated to this particular relationship in this particular market with this particular university health system? Or is there some pattern here that is being covered because Johns Hopkins is such a high-profile name, but it is actually happening in other markets with other university health systems around the country. So it's just I'm just curious about that. I don't have an answer to it, but it is curious.
Yeah, I mean, that's why it's worth talking about. I think is that if this becomes a trend of many academic medical centers, then that would change a lot of things. If it's only Johns Hopkins, then it matters if you're in Baltimore, but it doesn't matter. I mean, maybe they pull people from all around the country, but it's just that one system. So it's hard to know.
Yeah, and look, I mean, I think it's now explicit because there have been so many instances of it. I mean, we can go completely away from healthcare and look at everything that's happened with Disney and now, and Jimmy Kimmel and the mass cancellations of Hulu, and now Elon Musk and what he's attempting to do with Netflix. One of the ways that people are exercising their belief system is through boycotts or different economic actions that they can take, right? Sort of taking the playbook of nation state sanctions and exhibiting it, saying, hey, look, people listen to the pocketbook, we're going to sort of act in that manner. And it's one thing we see labor organized to do it, but when you start seeing organizations start to make these calls, it feels like this is it feels like this could go viral, right? If there's principal differences, especially as different employers, take on different positions on different matters that could cause huge, ethical issues for universities, right? I mean, I think that's the other thing. There's a whole backstory here to, well, why would Johns Hopkins not be interested in aligning with certain employers? Perhaps they have what for them is a good reason, right? Perhaps for them it's a really good reason. So those are the kind of things I'm just curious about being underneath this story.
Yeah, I think that's right, and it's also, I think, it's sad if we get to that point where hospitals are refusing care because they don't like where the person works. That's going to be worse medicine overall, and we may end up being there, and it might even be a good decision for the hospital, but it's not going to be good for the people that live there.
Yeah, I mean, at the end of the day, we're the losers.
I don't know
right?
the details. So it's,
yeah. At the end of the day, we're the losers of all these sort of organization versus organization, power versus power battles. Okay, so now moving to a story really around the Affordable Care Act, which in so many ways is the centerpiece of the government shutdown. The Wall Street Journal has done a little story here talking about the healthcare subsidies, sort of who is getting these subsidies. And they start the article with a map that lays out where the growth by percentage has happened in the Affordable Care Act marketplace. And, the range here is anywhere from 0% growth from 2020 to 2025 up to north of 150% growth. It's pretty clear that the South and the Midwest are where the majority of the growth has happened. Our home state, Tennessee, and many states across the South have north of 150% percentage growth, right? And I think that probably aligns with socioeconomic status in those states. We then look at the next chart a little bit further down, and it talks about what percentage of people enrolled in Affordable Care Act plans receive a subsidy. And I had actually never seen this. This source is from the Kaiser Family Foundation. They don't exactly lay it out, but it's basically 90% across the board. It's basically 90% of the families, the people that are enrolled in Affordable Care Act plans receive a subsidy. And so if these subsidies go away, I mean, you can really see what kind of sticker shock we're in for. And I think like 30 days, right? When do the renewals start opening up?
Well, the decision point is I think it's November 1st. It might be the 15th, but then the payments will be in January.
Yeah, but we'll see new rates in a month, right?
Yeah. Yes.
Yeah.
So the rates are going to be high. We know the rates are going to be high.
Oh, they're going to be incredible, right?
And they're going to be up 15 to 25%.
Yeah, they're going to be up big time, and I think that this starts to add a little bit more strategic value to the Democrats' decision to shut down the government, right? Which is to say, are they going to get anything out of it in terms of a shift of the law, right? They don't really have any leverage to get anything out of it in terms of a shift of the law, right? They don't have the votes, they don't have the control. This is effectively a protest, right? So, but it's a protest that calls attention to the issue such that the Wall Street Journal is doing this story on it, and such that people are saying, what is this shutdown about again, right? And I had thought about it. I mean, I was talking to Emily about this, on Tuesday. I had thought about it simply from the perspective of what they can achieve, directly from a policy perspective. Like, can they actually get the subsidies, put back in? And my view was, I didn't see where they had the leverage to do that. But if you think about we're just like game theorying this thing out a little bit. If you think about it from the perspective of they are executing this protest with enough proximity to the rollout of the new rates, such that when the sticker shock hits this broad swath of Americans, they realize, oh, this is what the Democrats were making all that noise about, right? And that actually could give them some moral high ground as they roll into campaigning for the midterms, even if they decide to reopen the government. So that's actually a strategy that I had not previously contemplated, and that makes good sense.
Schumer or someone in the Democratic Party, it's a very smart strategy, because if they win the fight and Trump administration does something with the subsidies, puts them back, or makes it less dire, they can claim victory. And if they lose, I think they still win, because then they get to like point and say, "See, we were trying to make this better." And so it's a great political calculation that is going to benefit the Democrats. Now, and then as we can see from the map, states that didn't expand, I think, is how it breaks down. But a lot of red states are going to get the lion's share of the challenges if the subsidies go away.
Yeah.
So, I think the Republicans would say, well, you're trying to relitigate something that was already passed in the summer.
Yeah, that's right.
And I think the answer is yes, they are, and they win either way. Politically, they win either way. Now,
yeah, well, here's the thing. I think there's only one way they're going to win, and I think it's the latter, right? I think it's the court of public opinion, and I was skeptical about that because the variables I had used were as this thing drags out, the general public will say we want our government open. What the hell is the problem? But I hadn't thought about the timing of the rollout of the new rates.
Yeah,
and that is different calculus, and that is I think that is probably politically a win for the Dems, right?
I mean, given the cards they had to play, I think it's a good play.
Yes, given the cards they had.
I think your thoughts last week, or maybe it's 2 weeks ago, like the Democrats need some coherent plan for the government deficit and like where the country's going from, how we're going to pay for all of our entitlements, and they don't have that, and so they got to figure that out. But this was a good gambit. Almost no matter what, I think that they're better off than they were September 1st. Yeah,
I agree with that. Okay, moving into providers. Women's metabolic health provider Allara Health expands to 50 states. This is, an atypical story for us when we talk about providers. We typically are talking about health systems, not maybe a smaller women's health provider. But Vic, why did you pick this story for us to cover?
Yeah, it's sort of there's two. I'm covering this. I'm interested in this theme where the healthcare delivery systems now are going nationwide and really focused on delivering a particular thing, in this case, women's health, to the entire country, so that everyone can, and then they can really invest in brand and TV ads. And Hims certainly did that with the Super Bowl ad. But then as I read it, the results that they have sort of hidden down in the story are incredibly positive, and I just think we need some good news today in the news cycle. The whole world is so bad that they have some great results. And so after 10 months, 2/3 of the pre-diabetic patients that they worked with had normalized their A1C levels. So 66% and 77% of diabetics had reduced their A1C levels out of the diabetic range. And I have not seen results like this around diabetes care in a nationwide thing like this ever. Particular companies have done it with a lot of focus, but it's great to see that you can really make a difference in women's health.
Yeah, we have definitely seen. Maybe this week was the first week that we didn't have like a big story about a women's health VC deal, but there've been, week after week, great VC deals happening in this space. And it's like, what women's health advocates, whether they be patient advocates or, innovators and investors, have been saying for a very long time is this is low-hanging fruit because women are effectively second-class citizens in the healthcare system as it stands today. The system is oriented towards men. And simply, if we were talking about this before we hit record, simply orienting the health towards women because they are a different gender. There's differences. There's clear biological differences. Like there's clear, it's like simply orienting healthcare towards women as opposed to you're a person then you're not a man. So we'll
Yeah,
do the best we
especially
can with you,
metabolic
right?
diseases. Especially metabolic diseases. I mean, like maybe joint
yes.
replacement or something else might not be as different, but metabolic is there's a lot of
differences.
Female and men. There just
we
are.
we have different hormone makeup. We process fats differently. It's like, yeah. So anyway, it simply orienting can make huge advances in the quality of the outcomes, right? And not to say that's where these companies are starting and ending, but it's like, gosh, we have so much ground that we can cover simply by orienting, right? Tens of thousands of Kaiser Permanente workers with expired contracts to strike on October 14th. We've been covering that this is about to happen. We know that Kaiser is well positioned to negotiate and end this strike. Is there anything noteworthy beyond the fact that it's almost certainly going to happen?
No, I mean, the way that they have to do it with the state laws, they have to give notice. So the union has given notice that they're going to walk off the job for 5 days on the 14th. So I don't know. Now is the time to come to some settlement, I think. But so that's just the reason to bring it up quickly. Like, I think there's a decent chance that it's going to happen next week. It's Tuesday, so a couple days from now.
Okay, going into pharma, Amgen lowers cholesterol medication price after Trump calls for price cuts. This is Repatha, which is quite a big drug.
Yeah, it's like a second or third line cholesterol drug. So it's not the first statin you get. It's an injectable. It's more. It's when you need more assistance. But I think it was a smart thing. They sort of made the Trump administration happy. They're going direct. They sort of agreed on $239 monthly. And I think probably the reality is that there's a lot of pre-auth against this drug, and there's a lot of challenges that they face. And so they were able to find a drug that I think they'll be very happy at $239 and not have all that friction to get their drug put to market. And then the Trump administration is happy with Amgen, and it kind of goes from there.
Yeah, look, at the end of the day, I'm sure Amgen has made tons of money off this drug over the years that they've had it in market, and lowering the price at a time when American families are truly going to be challenged with inflation, job loss, so many other things. It's a win for the American people. So no issues with that. Okay, we've got two stories in Health and Us. The first one, from the Wall Street Journal, patients are diagnosing themselves with home test devices and chatbots. This is like a yes, we know this story, but I guess it's important to pay attention to it, because we are now, I think, starting to see the early critical mass of the medicine 3.0 movement that the thought leaders in the space, like the Peter Attias and the Andrew Hubermans, have been ushering in for 5+ years now, right? A time, and I think AI has only accelerated that, where people are saying, listen, my healthcare costs are high, my healthcare trust is low, and I have to have more agency in taking care of myself. Like, I can't totally turn this over to a third party. And I think this is what the beginning of medicine 3.0 looks like.
Yeah, no question. And I think we have a lot of industry, doctors and healthcare administrators and payers or investors in that space in our audience. And I think that part of this is a wake-up call. Like, we need to deliver better care, better quality, lower costs, more openness, more visibility to the patients, or they will go seek answers on their own. The thing I've been telling everyone I talk to, I learned at a dinner over sessions, is a friend of mine at dinner had a contact at OpenAI, and he said 49% of all chats are related to healthcare. So, like, that's globally, and there's a lot. People are asking ChatGPT, what does this symptom mean? And then they're going to get their own lab test down the street. And that's a trend that's going to continue. And if you're in the industry, we need to be more like patient-centric, more patient-facing in order to help them.
Right.
As opposed to tell them, like, no, you can't do that. Just trust the person in the white jacket.
Yeah. No, I mean, look, I think I think that this story, ties in with our evolving investment thesis that this is becoming more of a mainstream model and more true first class healthcare, right?
Yeah, it's starting at really expensive concierge, like a lot of things do. Like let's take
That's
cell
right.
phones. I mean,
That's
cell
right.
phones in the 80s, only really wealthy people had them. But then, it sort of filters to be more effective, less expensive, more broad based over time. And that the same
Yes.
thing will happen here.
Yes. All right, I'm going to turn this next story to you from the Washington Post about how to stop the number one killer of Americans long before any symptoms. This is, personal to you and also, a big focal point of your new book, which congratulations was published this week.
Yeah.
Elevate Health 2050. Talk a little bit about this.
Yeah. So I have heart disease, and I had a real wake up call when a lab test, at HCA where I go, suggested that I needed further testing, and 50% of my Widowmaker vein, which is called Widowmaker because it kills a lot of people, is blocked. That was the wake up call. And so I did a whole series of health further around diving into heart disease. And then when I wrote my book, it's kind of a policy book. It's AI, post AI, what should healthcare policy be is sort of the quick summary.
Right.
And it's pretty abstract. And so for 9 chapters, I talk about like what I think health policy should be, really around sort of focusing on values and getting out of the political fights. But it's very technical, and I tried to make it approachable, but it's healthcare policy. And so I ended with kind of a moonshot project to end heart disease in 10 years and laid out kind of a plan to do that. And then in the Washington Post, there's this article today, which is 4 days after they must have read my book quickly, because the book's only been a couple of years. But this guy, Stephen Nyssen, I guess, at Cleveland Clinic, is saying the exact thing the book's saying, which is if we could just screen people earlier. I call for screening everyone over 35 with a very inexpensive calcium score. He says in this article, you could reduce death of heart disease by 80%, which is incredible. I was calling for an end to heart disease because that sells more books. But 80% there's a lot of deaths. 900,000 people died of heart disease in 2023. And so 80% of that is 700,000 people. And the reason is we are designed as a health industry to assess risk of death from heart disease in the next 10 years. I'm 55. I want to live much more than 10 years. So the 10-year risk is not very material to me. I don't care about that. I don't want to die of heart disease at all. And we just need to fix that.
Yeah.
And
Okay.
it would save a ton of money and save a ton of lives. And so it's great to see the Washington Post, support my book, and I'll send them some recognition.
To me, there's a little bit of a continuation of the conversation we had last week around screening, right?
Yeah.
I can't stop feeling that this is such a simple risk reward pro con trade to make. And that is not to say that the trade does not come with false positives and a bunch of things. There's no question, but I just kind of go back to, but what is the cost of every mis or undiagnosed person's life? You know what I mean? Like what is the cost? What is the cost of every single one? And I just think it doesn't get enough weight when we're evaluating cost, benefits, right? Of doing this kind of stuff.
And there's we're talking about low hanging fruit in women's health. There's low hanging fruit here, right? The cost of a calcium screen, $80, and it's as much radiation as you get when you're flying in a plane. So it's not that there's no risk, but if you go on a trip vacation, you're getting the same amount of radiation.
Right.
And that's it. And it's a binary score. You either have calcium in your arteries and therefore have heart disease, or you don't. And then we can triage people and say, okay, if you have heart disease, we should get you into care. And if you don't, then it's about a 10-year warranty. You don't have to worry about heart disease for 10 years. It's an easy one to pick. It's a low-hanging fruit, and it's the number one killer. So we should.
I completely agree. And of course, I'm highly supportive of you, getting this word out because it's personal to you. And, obviously as your partner and, long-term friend, I hope we've been friends long enough that we're lifelong friends, but I hope we're really lifelong friends, and
I hope our lives live a long time.
Yeah, exactly. And that's dependent on you, winning this battle against heart disease, right? That's part of the deal.
Well, and I mean, I have my cholesterol under control and in good shape, but that's because I was lucky enough to be at a really good primary care doc who caught it. Yeah,
you caught it.
It's asymptomatic. You don't have any symptoms, so it's something I'm passionate about. So thanks for letting me share.
Yeah, absolutely. Okay, so we are now doing our one story on Web3. I continue to, in my head, commit to helping you curate stories on this space. But I do think if we're going to pick one, this is the story to pick.
Yeah.
New York Stock Exchange owner to invest up to $2 billion in Polymarket. So for anyone who's been living under a rock, Polymarket is a wisdom of the crowd platform that leverages gamification and betting to generate predictions around what is going to happen in the real world. And it grew in prominence as it predicted far in advance of any of the polls, the election of President Trump in the last election. And it has not been very much present in the United States because of its ties to Ethereum and cryptocurrency, and how that fell afoul of the Biden administration's regulatory agenda. And so it's making its way into the United States. And this investment, I think, really sort of solidifies that. Intercontinental Exchange is investing $2 billion in Polymarket. They would not do that if they did not believe that Polymarket was going to have a clear path to be fully available in the United States. And so I think I think the point here is that our listeners need to get ready for Polymarket to be a real part of their lives, right? In the same way that the news and polling is part of your life, Polymarket is about to be a cornerstone of the way that we think about how the future is going to play out.
Yeah, and I love the picture too. We just maybe scroll up a little bit. You see Shane from Polymarket and Jeffrey. They couldn't represent their relative companies any better. I mean, Jeffrey's super buttoned up and older, and then Shane's, he's great, but he's much younger. Exactly. He's a hacker.
He's a hacker. I mean, I don't follow anyone on X, but he's in one of my lists, and I saw a post where he had a picture of himself in 2020 from his office that was his bathroom. And he was like running out of money, almost had to give up, ended up betting it all. And, now look at where we are, right? With this $2 billion investment. And I mean, yeah, you're right. I mean, look at him. He's an Ethereum hacker, right? That's what he is. And he's about to be the CEO of a company that's going to be more important than Gallup.
Yeah. Oh yeah. By far. I mean, I never look for Gallup results.
Yes.
Yeah. So it's just another sign. We have one every week. We're going to start having more. That Web3 is coming to change infrastructure.
Exactly. Okay. AI rundown. And I think we'll run through these stories pretty quickly here. So 2 stories back to back on Microsoft. Microsoft is and related to healthcare, right? So the first story is that Microsoft is pushing away from its dependence on OpenAI and really, deepening their focus in healthcare through a partnership with Harvard, specifically Harvard Medical School, to roll out medicine-specific AI.
Yeah, and I think it's great to have Microsoft trying to catch up. So they are got a big partner with OpenAI, but they hired Suleiman, who's there in the picture, and they're running now hard to catch up, which would be great. It's good for the market.
Yep. And then the second story, which is even a better story for me, is Microsoft has released on GitHub, I believe, AI tools to help rural hospitals improve their financials. So, we all know that rural hospitals, especially, they were already, embattled. And then once HR1 went through, it was kind of like, dead man walking. We have this $50 billion, whatever you call it, healthcare rural innovation fund. It's not going to save these hospitals. And so it really should be an all hands on deck moment, but we're also distracted with so many things. It's such a, challenging time. So it's so cool that, one of the biggest and wealthiest companies in the world, Microsoft, is starting to, give back in some way, shape, or form. And they're providing a free, openly available AI claims denial navigator, right? That is really can help these small rural clinics that can't afford any of this stuff to play the game with the big guys, right? Because the insurers that they're dealing with are much, much larger than they are. So to me, this is a great story, and hopefully it's a model for how these technology companies that really are the basis of the American economy at this point can give back to some of these industries that are going to struggle and really are going to need AI to make it across the chasm.
No question. And I think it has another positive, which is, well, first of all, Microsoft owns GitHub. Not everyone listening maybe knows that, but it's one of their properties.
Fair point.
I saw this story and I was not aware, but GitHub has, I think it's like 80 models available for free to try out in their model sandbox. And so I thought, well, yeah, I'll go check it out. And now I'm using models on GitHub because it's fun. You can't use a ton of tokens, but you can use enough to test several things.
That's
and
cool.
I want to test all these models and use one API to test them all. So I think it's a great thing to do for rural hospitals. And they're also bringing awareness to sort of the power of GitHub in a way that is going to be good for Microsoft. So.
Yeah. Awesome. Okay. Moving to Bloomberg. They've got a story here around Nvidia's fast and furious deal making. The term I've just kind of heard over and over on podcasts as they're describing Nvidia's deal making is circular deals, right? Nvidia gives you money, use that money to buy Nvidia chips, basically, right? But what I love about this article is that they have a fantastic visual here to sort of help illustrate all the deals. But what I love most about it is in this visual, and you can't see it if you're just listening, but we'll put the link in the show notes. What I love most about this visual is that it puts NVIDIA at the center. And that is what I think Jensen Huang and the team at NVIDIA are doing, is they are putting themselves at the center of the future of the AI economy by leveraging their unbelievable capital and their chip availability to deeply integrate themselves in all of these different players, who people might consider to be, competitors, but they're just embedding themselves in all sorts of ways that ensure that over the long term, they will be there. Right. And if you think this thing is only going to grow in the long term, then you can see how NVIDIA becomes, who knows how valuable. They're 4.5 trillion today. So, but it's really, really smart. They're trading in the currencies of hardware, software, investment, services, venture capital, and across organizations like Intel, CoreWeave, OpenAI, XAI, Figure AI, Mistral. It's a brilliant way to not think petty in the small term and think about the future of the world and just say, I want to be in all these companies, right? Even the ones who could potentially, create chips that would disrupt me in the future. So I just think it's brilliant.
Yeah, I agree. First of all, it may be a circular, but they have like 85, 87% margins.
Yeah.
So, yes, they give them $100 and they use $100 to buy chips, but that revenue is high margin revenue. So NVIDIA will do fine. And then they're also getting everyone mean, CUDA is their like software that connects it all together. That if you're going to train a large model with Nvidia, you need to use it. They're just going to standardize like their chips and their software as the de facto standard for the whole market.
Yes,
and that's also good for Nvidia. So they'll be fine. The circular deals will work fine.
Yeah, yeah. I do understand why they annoy everybody, but I think if you think about it as a strategy for Nvidia to ensure that they are integrated in all of these companies in very strategic ways for the long term, it's really, really smart. It's really smart.
Yeah, I think it's a little different than when we were putting broadband out there, because broadband, maybe there's some proprietary aspects, but it was a lot of commodity-based stuff.
Agree.
In the building out the internet.
Agree. Okay, going into some OpenAI stories. So the first one, OpenAI is reversing their stance on the use of copyright works in Sora. So for anyone who didn't know, OpenAI just said, hey, you have 48 hours to, say no to your copyright, or we're just going to use them. And I mean, obviously, this is just ridiculous. Like the idea that you were required to opt out by default with 48 hours is just, it's just not even. Whatever. I mean, these are the things that just make me not be a fan of this company and this guy. But I don't know.
I mean, I'm cynical enough to think it was. I think it was planned the whole time. It helped the launch go because you could have how to train your dragons in the launch, and then once the launch is successful and they have the #1 app out there, then they pull it back, apologize, move on. I think it was calculated.
Yeah, you're probably right.
I mean, I have no evidence of that.
No. Listen, you're probably right, and like, did we need one more thing to be angry about right now? It's just not a fan. OpenAI, AMD announced massive computing deal marking the new phase of the AI boom. So this is interesting, bringing AMD into the picture. Little known fact: AMD's CEO Lisa Su is the first cousin once removed of Jensen Huang. And so, sure, I guess Nvidia and AMD are two different publicly traded companies, but I bet their family office is doing just fine. And it's hard for me to, it's just like a simulation we live in that's actually the case. But yeah, look, I mean, everyone is making sure that they don't have a singular point of failure, whether it's at the chip layer or the model layer or the power layer. There's a lot of partnerships being struck, and I think to some degree that's kind of an all boats rise environment when there's not over dependence or too much trust in any one of these partnerships.
Yeah, that's right. I mean, it's good for OpenAI to have other suppliers, but I don't think AMD is a competitor to Nvidia. It's just sort of like other inference stuff.
Yeah, and I mean the headline here is that OpenAI through this commitment will achieve 10% ownership of AMD if AMD hits their milestones for chip deployment. So it's incentive based. It's an opportunity for AMD to get back in the game with the leading model in the United States right now, and we'll see how it goes. OpenAI announces their Apps SDK, which allows ChatGPT to launch and run third-party apps like Zillow, Canva, and Spotify. So we're starting to get we're getting very close to agentic AI being real.
Yeah, this was a big announcement to me. Like leveraging their user data, which they have 800 million weekly users, which is a big number.
I am not one of them.
I'm not a weekly user. I do pay them $20 a month, just to see what they have.
Yeah, I pay them. I just am not a regular user. But,
you don't use it weekly, right? Yeah, but the memory feature, which I have turned off, people love, and it collects information on you as you're chatting that then personalizes it for you. Of course, it's super sticky. It's also giving them everything about you, and then they use that to sort of allow these third-party developers, which will be small startups eventually, but now it is the big guys, Zillow, Canva, Spotify, to deliver it in like in chat experience where you could play music or, the example they give is design a flyer for your dog walking company. I think it's really smart. I mean, they're going to be able to leverage this massive user base to pull in a bunch of app developers, and then they have all the data. It's flowing through them, so they can see which sub markets are profitable. We were talking earlier. It reminds me of Facebook in the mobile space, where they brought the users and they convinced all these app developers to build on their platform, which worked for a while until they decided they wanted to make more money, and then they just took the profitable areas. I don't know. I see the value, and it also is scary because it's happening quickly, and they could run the table where they have all the users.
Yeah, I think OpenAI is a company that presents like Apple, but is actually like Meta. I am so leery of their privacy and data, practices. And I'm almost sure they're going to, the number one thing I'm hearing about OpenAI that is really concerning me is that startups are more and more referring to them as a discovery engine because they're starting to take over such a big percentage of search, right? And that just tells me they're gonna pick the winners, right? And they're gonna start to also sell ads. I think that's almost certainly they have to generate more revenue, and so if they're really going to take a chunk out of Google, it's not enough to just take the search traffic. You have to also take the ad revenue too. Right. And I'm sorry, but my history is that where I think Google did a great job was they offered an enterprise product with proper enterprise protections that you could pay for, and you sort of were opted out of all of the ad engine stuff that they had to offer, right? And that's and that's not true with Meta. It's like if you're in Meta, you're part of the product, and it just feels to me that if you're in OpenAI, they haven't proven to me otherwise. You're part of the product. That's my beef with them.
Yeah, I agree completely, and it's a big momentum that is running in one direction. 800 million weekly users are a lot.
Oh yeah. No, they're going to be huge. They're going to be huge. But the beauty of it is, they don't have a monopoly, right? I mean, like you have the option to use Perplexity or Gemini or Grok or whatever. There are other very, very viable alternatives. So that's if there was a bright spot today. Which is not true in social networking, right? I mean, there's not an alternative to Meta. You can't tell me TikTok is an alternative to Meta. TikTok's an entertainment platform. It's not a social platform. If you want social, you're you're either on Meta or you're on X. There's not two great options, So what I love about the frontier model world is we've got Anthropic and Dario. You know what I mean? We could be with the nerds over on Claude. And it's great. It works great.
It's great.
Yeah.
That's right.
All right. Let's talk about Elon and Memphis. Unbelievable the relationships that Elon must have in Tennessee to build out what he's building in this state. Not just the data centers in Memphis, but also the boring tunnel, building a tunnel underneath Nashville, Tennessee. But let's talk about what he's building with Colossus in Memphis as the data center that will help XAI, win the AI race.
Yeah. So he's spending $13 billion in cash this year, and most of it is going into Colossus 2 in Memphis, Tennessee, in chips and infrastructure and energy. It is called Colossus. It is a huge operation and the biggest data center connected all together in the world. And he's betting that will lead to a much better large language model, much better, because the scaling laws have always kept up in the past. I don't know. It is a pretty good bet. But it's going on in Tennessee. He just moved into Tennessee a year and a half ago, maybe.
Yeah, but he's been building
He's
a
the
light
number
speed.
one corporate. He's the number two corporate taxpayer in Memphis after FedEx. But there's not a lot of jobs being created. There's a lot of tax base, but not that many jobs.
And also a lot of power usage and a lot of water demands and a lot of concerns about pollution.
Yes, that's right.
So
yeah. Now he is sending some of his employees to walk around Memphis and pick up trash as he's using the water at a pace that no one else does. So I mean, Elon knows how to do some local stuff, but it's a huge place.
This world is just, it can't be real. It can't be real.
Yeah, that's right.
Intel debuts a new technology in make or break moment for the CEO's turnaround bid.
I was super excited to see this. I'm not technical enough to know if it's going to work or not, but they have created a couple things they claim are breakthroughs. There's certainly big innovations in chip design that are going to allow them to compete with, or they would say try to unseat Nvidia. Something about how they're delivering power to the circuits. It's on the back side of the chip, which is good for heat dissipation somehow, much more efficient. It doesn't matter. They are pushing this, and it's great to see that, again, there's competition. It's not going to be a one horse market.
Mm-hmm. Mm-hmm. Anthropic and IBM are partnering in a bid for AI business customers. So, this is, I think, great because I think IBM is one of those not much thought of really, really strong IT consulting companies, right? And they have really strong, long-standing contracts, and they bring in partners. I mean, it's been a long time since they've created any great technology, but they do bring technology into the enterprise, and it's usually alternatives to the traditional Microsoft offerings. And it's great to see Anthropic and IBM be in partnership here, because this means Anthropic is going to have an enterprise chance at being viable.
Yeah, that's right. And to your point about Google having enterprise and OpenAI not, Meta not, they announced their Claude Enterprise in September. So they're ready to go with enterprise, and it's as you said. I mean, it's sort of, you pay more, but then it's your own data. You're not getting served ads, and they're not funneling the data out to target an ad at your house. I think it's great to have them come together.
Yeah, agree. The Kobayashi letter. This is an X account that you and I track, and every once in a while they've got something that we got to bring to the show. This graph that they have here, if you're not watching, you definitely need to click on the link in the show notes. It really shows that the demand for compute that this AI race is creating is making it to where we had this whole industrial era where the engine was critical for productivity, and oil was really what drove that. For a while there, you had people talking about data being oil, but I think that was maybe data was soil as opposed to oil. Compute is oil. The demand for compute is growing twice as fast as chip efficiency. And so that sort of underscores Elon building out Colossus, the growth of so many data centers happening around the world. This is the currency. Do you have compute? You were just talking about access to tokens. Tokens are really just in themselves, that they're actually just a representation of access to compute. And I can tell you, I think most people have not wrapped their head around compute as fuel, right, for the AIs, and that access to this compute is going to become an incredible war, right? Because whoever can get the most compute can power the most AI to win at the end of the day. I remember back before you and I started working together, back when I was at Emma, you used to this is before cloud computing, when you used to have to put your rack together.
Yeah, you had to physically go and put it in.
Yeah, you had to go in there and you had to put your servers in a rack and literally plug them in. And so we were down at Inflow. David Clements was the CEO at the time of that data center, and we had this rack, and I remember Vanderbilt bought all the power in the data center. They did a contract with Inflow and they bought all the power. And Vic, we had a rack. I had space to put the server in. I could not plug the server in.
So you had to pull it out?
I mean, no, we had to move to another data center.
That's what I mean. You had to pull it out and go somewhere else.
Yeah.
Because you couldn't get the power. Yeah.
Yeah. We couldn't get the power. That Vanderbilt had bought all the power. Right. And so that's a scenario we did not anticipate. And it really happened. And so I think it's important for people to understand, because compute is going to be this highly valued commodity, there will be wars over access to it. And we just all assume we all have access to these AI models today. I don't think this is a built-in assumption. It is limited. Compute is limited. I think over time, as we start to maybe run into compute shortages or compute cartels, where groups are just sort of hoarding all the compute. You could look at the Bitcoin holding companies. They're holding all the Bitcoin. It could mean, compute inequality could become a problem.
Yes.
So,
yes.
I just want to introduce this concept to people of compute is the core commodity here, folks.
That is why Elon is building Colossus in Tennessee, where there's relatively inexpensive power, and he can leave the Virginia, San Francisco, Texas, and get better access. But that's why OpenAI is doing Stargate and Oracle's doing all things. It's going to be the coin of the realm, or the most important thing. And one of the great things about our free market kind of capital markets is they can gather capital and get it in the right place relatively efficiently. But we have been hampered in power generation because it's dirty and bad for the environment and difficult. China is way ahead of us in that. We'll get to a quote on that in a minute. But there's going to be a lot of data centers needed. I mean, I thought we were building a lot of data centers, and further down, we don't have enough data centers. There's going to be more and more that need to be built. So I think the message is strap up, because it's going to get more so, not less so in the next 2 years.
Yes. Okay, next post is also from X. Brian Rommel is sharing a rundown of Jensen Huang on CNBC. I really love the way that he has synthesized what Jensen talked about. But it's great. Jensen talks about AI as a stack, and he's being interviewed and he's being asked, how far ahead is the U.S. from China? First of all, it's a pretty presumptive question. It's a leading question. It presumes we are ahead. But, she's asking him, how far ahead is the U.S. from China? And he gives a fantastic answer, which he says it depends on what part of the stack you're talking about. So he says, fundamentally energy, China's way ahead of us on energy. We are ahead on chips. China is competitive on infrastructure. China is competitive on AI models. We have the highest performing models, but they've got the best open source models. We have more regulation. They have less regulation. So they're iterating faster. And where he really sort of gave them the true edge. So at the end of the day, at the bottom and the top of the stack, they're actually ahead. The only place where we're clearly ahead, he said, is chips. But the top of the stack is applications. And what he said is and this is true, man. It's impossible for Americans to really understand, because we don't go to China, how rapidly their society adopts technology and adopts new innovations. and they are an engineering-led society, not a lawyer-led society, right? Most of their leaders have engineering backgrounds. Most of our leaders have legal backgrounds. And so we sort of focus on courts and regulations and things like that, and they focus on building. And they just have more apps in the wild that are actually working. So who is more likely to build the first AI-enabled hospital? China, right?
No question about that.
And the thing is, like, the US is ahead on chips, but because China is ahead on open source models, and as we've covered so many times, they've figured out ways to do more with less. It's like, how big of an advantage is even being ahead on chips, right? It's debatable, right? I mean, if you've got the energy, you've got the open source models, you've got no regulation, and you adopt and adapt applications faster, who is actually ahead?
Yeah, I mean, they are going to lose on efficiency. Our chips are more efficient, but they have more energy by a factor of 10, probably. And they have open source models and plenty of good chips and better models, and their competitive markets are brutal. And that makes like their entrepreneurs and their business executives really battle hardened and really strong.
Yes.
And
yes.
We are not ready today to compete with them. So, I mean, I think Jensen's right. We have plenty of work to do. I mean, we have some advantages, but we need to pay attention, because the thing that I always get comfortable with that we would win in the end with China is their population is aging. They don't have a big group coming up, as far as young people. But with robotics, I'm not sure they're going to need that anymore. So
right.
It may not matter. And that's what's gotten me really nervous in the last few months.
All right. We're ending with Bernie. Bernie stands apart from much of the gerontocracy because he seems to have more of a pulse on, young people, younger generations, and technology than most of the gerontocracy. I will give Trump credit that I also feel that he is not sort of your typical geriatric. People are talking about his health and his age a lot, but he still resonates with the youth, and the youth understand him in a way that, Pelosi, for example, does not, and Joe Biden, quite frankly, did not. So, but Bernie Sanders does. He does. And he is warning that AI could erase 100 million jobs. And he's taken to YouTube and sort of put together this entire explainer about this with his own policy recommendations. We're going to share the link to both the article from Emerge as well as the YouTube link. And I don't know that we believe that his policy is exactly correct. What I think is fantastic is he's saying the quiet part out loud. And this is something I think Bernie has done a great job of doing throughout his political career, is saying the quiet part out loud, saying the part that if you're in a party, the party line may not quite allow you to say. This is the value of him being an independent, is he can simply say the thing. We started this show with about a 10-minute discussion around, AI and jobs. And I think we were trying to right size for where we are today. But inevitably, we're clearly in a place where if AI can wipe out certain segments of the economy, it is marching towards a future where it can wipe out whole layers of the economy from the labor perspective. And for our politicians in both parties to not take that potential future seriously, by communicating it in the way that Bernie has here, is shameful, actually. And so I give a ton of credit to him for at least saying, this is a very possible future. It's a very possible future. And our leaders have to start seriously discussing what types of policies we would put in place in an economy where we would have that kind of labor collapse. So I just said a whole bunch. What do you got to say about it?
Yeah, I agree. I mean, I think everyone listening should watch. It's a 12-minute video on YouTube. It's not too long. And Bernie, I mean, the picture here, he looks, it's wind-blown thing. Yeah, there he is. I mean, he's very sober. I mean, he describes the situation, I think, pretty well. And then he has a plan to protect the citizens of the United States, which is his job to do.
Right.
And I think whether I disagree with parts of it, yes, I do. But I'm happy that someone is taking their job seriously and trying to protect the people, the humans, because no one else seems to be doing it. And so I think we need to start having these conversations. And some of his ideas are right. Some are extreme. It doesn't matter. We need to start understanding, this is an exponential curve. I mean, it's the reason I wrote my book. Like, what happens in healthcare when we have a 4-order magnitude increase in capabilities? Right. So it's 10,000 times better. How do we think about allocating resources to the population in that setting? And that's a few years from now. That's 5 years from now, 10 years from now. And so we're all going to be alive then. And we need to understand, yes, it's going to affect jobs negatively. It's also going to have a lot of really positive effects. And people should listen to Bernie, because the Democrats they're going to have a populist movement, and
it's going to look
like this. It's the only choice. And it's
the only choice they have.
Yeah. And it's going to be a compelling opportunity for a lot of voters. They're going to win a lot of elections. So this is sort of a precursor of what's to come over the next 5 years. Bernie is too old to run for president next time, but people are going to listen to this, and I think there'll be a movement in the Democratic Party that is, you're seeing it in New York right now, and there's going to be more like this.
Yeah, agree. Okay. Long show, good show. Lots covered, lots discussed. And hopefully next week when we come back, there's some progress on this government shutdown. Hopefully something we didn't talk a whole lot about, or really at all, but hopefully the peace talks in the Middle East actually stick. It's a little early to sort of say that this week, but I think by next week, we hopefully will have some indications that, things will be, receding, and that we'll put an end to the violence in the Middle East. Hopefully you and I will be back to do another show.
Yeah. I hope so.
I hope so too. All right, man. Thanks for putting it together as always. See you next week.
Yeah. Okay. Bye.